Welcome back to Strongman Personal Finance. We got to talk about this amazing ETF that everybody seems to be piling into. Not SCHD, SCHG, Golf, Gamma. What is this ETF all about? Well, it's basically a tech ETF. And people like this because it has experienced some pretty fantastic performance. If we read about it, we can see their annualized returns for the past 10 years is 15.71%. That is an insanely high return. That is mind-boggling, okay? It's massively outperformed VOO. It's outperformed VTI. It's definitely outperformed VT. So why would you not invest in this ETF? Let's look at some of the characteristics, and then I'm going to give you my honest thoughts about why I don't like this. So we can see it's been in inception since, December 11th, 2009, with an insanely low expense ratio. I can't hate on that. That's very, very, very cheap. I think it's, 1 basis point more than the total market index. Very cheap, not bad. It's got 243 securities, 243 stocks, so it's actually more diversified, quote-unquote, than another popular ETF, QQQ. And it's got quarterly distributions. You can get your little dividends every quarter. What index does it track? The Dow Jones U.S. Large Cap Growth Total Stock Market Index. Now, I looked up this index on the Dow Jones website or whatever. The index itself actually has 758 holdings. So SCHD is actually, well, it probably matches the index pretty close. It doesn't exactly correlate to the index. Now, we can see the returns. Look at the years. 34%, 15, 3, 6, 28, 36, 39, 28. And most recently in 2022, it got shellacked. So I think a lot of people are kind of expecting, well, the historical growth rates were insanely high. Can I expect that in the future? And the thing is, you don't really know. Now, let's look at some of the top holdings of this ETF. Number 1, Apple. Apple comprises 14.26% of this ETF. That is insanely overweight Apple. When you look at the investable universe, the market has assigned a value of roughly 4% of the investable universe to Apple. Go look at the VT ETF. It's basically the total world. Apple is 4% of the global market capitalization. When you invest in SCHD, you are massively overweighting Apple stock. Next in line, Microsoft, 12.59%. And then we have a bunch of other names that I'm sure you recognize. Amazon, Nvidia, Alphabet, Tesla, blah, 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 blah. I don't like this, guys, okay? I'm going to keep this video very short. Massively overweight some of the most amazing tech stocks that have massively outperformed in the last decade. What you have to be careful of is chasing past performance. You should never invest because of past performance. If you are looking at these returns and you are saying, I'm going to get those in the future, you may not get those. As a matter of fact, you may get a lot less than that. Because what people do, and this is a flaw when they think about investments, they look at past performance and they always say, well, that return is what I'm going to get into the future. So why would I buy something like VTI or VT, which has underperformed this index? It has. When they could instead put all their money in here. Well, you have to consider diversification, and you have to consider that a lot of things in the market are cyclical. Sometimes value outperforms. Sometimes growth outperforms. Sometimes large caps do well. Sometimes small caps do well. You don't know what the future holds. And the worst mistake you can make is buying stuff because it historically massively outperformed. Think about the ARK ETF. What happened to ARK? Massively shot up, crushed all the other indices, and then it collapsed. So I would not recommend this ETF to anybody. It has good characteristics. It's got a low expense ratio, extremely cheap. It's got a very low turnover ratio, so you're not going to be heavily taxed. But other than that, it's just buying the most successful asset class, basically large cap tech, that's outperformed in the last 10 years. And that is dangerous for your financial future. That's my thoughts. Not the worst ETF, but I guarantee you, most people that are buying this ETF will probably not be holding it in 5 years. Have a wonderful day.